Hello and good morning. Okay, let's go ahead and get started. Welcome to today's webinar, and this is all about the brand new template that was released just yesterday evening called Relative Strength, Ranking and Indexing. And it is one of the more extensive, insightful, exciting templates that is in the system. It's taken a lot of coding to put this together, and I'm really excited to share it with you today and show you how it works. So without further ado, first of all, there's obviously the disclaimer. So we're going to do a quick review of last week using the % buckets, and then we'll take a look at this new template. But before we do that, we probably need to cover a few little definitions. Relative strength. So there are two broad categories of relative strength. There is a comparative relative strength, where you're comparing one stock versus another stock. If you were, for instance, doing pairs trading, you might take Amazon and Apple, for instance, as an example, divide one price by the other, and you end up with a ratio. You can buy certain numbers of shares to exploit if you think that they are highly correlated stocks and moving together. So you could do that type of thing. This is not about comparative relative strength. This is about an individual stock's relative strength. You can calculate that value using the historical data of an individual stock, but those values can be used to rank those stocks versus other stocks. So there are many ways to measure relative strength using methods like that. So here are a few examples. You could, for instance, take the % of price that, above or below a particular moving average. You could take the % price change over a certain number of bars. So that would give you a way of comparing a list of stocks. And you say, you know, over the last 10 bars, this one has gained 10%, this one's gained 9%, this one's lost 5%. You can then rank them, okay? And you end up with a relative strength ranking. Another way that I found to be quite useful is the slope of linear regression line. So take an n period linear regression, and how steep is that line? Compare all of the stocks in your list, rank them. You have a relative strength measure to rank. Alpha 21 is something that has been in the system for a while, and that's just again, it's dealing with various segments of time and taking the % price change over various segments and combining them in a ratio. The IBD method of calculating relative strength and how they arrive at their IBD top 50 is similar to Alpha 21, but just uses different time periods to do the calculation and different combination ratios to combine those time periods together. And then you have things like Wilder's RSI. Everyone's heard of that. That's a very common. Relative strength index is the name of that. And then Connor's RSI. That's recently, within the last, I would say, 8 years, been released by the Connors Group. And just another way of dealing with relative strength. Now, there are some differences in all of these. Obviously, they're going to give different numbers. Wilder's RSI is more of an oscillator, so is Connor's RSI. Wilder's RSI gives, in theory, overbought, oversold readings. But all of these formulas end up outputting a value, and that value you can then use to rank and compare stocks. So that is essentially a quick relative strength overview. And now let's get on to taking a look at the program. Now, I said, first of all, I'm just going to take a quick look at this week. It's been a very interesting week in the market. So I'm going to use my %B buckets report. Let's just get a feel for where we are. Okay, so as of Friday, we have 85% of stocks in the S&P 1500 are below their mid-Bollinger Band. And we have quite a few grouping around the lower Bollinger Band areas, but you still have more above the lower band than you do, obviously, below the lower band. That's down here we have about 18% that are below the lower Bollinger Band. Compare that to December 24th. Okay, December 24th, there were 99% of stocks in the S&P 1500 below the mid-band and 45% below their lower Bollinger Band. That was an extreme measure. You don't really see that reading very often. Today, we have essentially on Friday, in the SPY, the S&P 500 index, or the E-mini S&P futures, we have come down to the 200 period moving average. Just hit that last week. We closed below that on all of those indexes, just below. Interesting thing, I think, in the market is where we are today. If you've taken a look at VIX recently, you will see that VIX is around 18.5, but it seems to be relatively low compared to where VIX was when, for instance, back here on this day, which would have been May the 13th, when we had 75% of stocks below the mid-band. We obviously hit a low, temporary low here, but VIX was a lot higher than it is here, and we're even lower today than we were back then. But as you can see, back on May 13th, there were, and let's just get the number here, 30% of stocks below the lower Bollinger Band. So VIX is a measure of fear. It's calculated by taking strips of options in the SPX, both put and call options, and giving a reading as to how much people are prepared to spend to buy the protection. So the higher the VIX number, the more fear there is in the market. But to me, it's a very interesting situation that we currently are at a 200 period moving average, lower than we have been at this level here, but the VIX is still, I think, relatively low. So there's not a lot of fear in the market, and that is concerning, I think. But we are at a 200-day moving average, and I guess we have to wait and see what happens from here. I think we're one tweet away from making new highs, and also one tweet away from selling off quite a lot more. Okay, so that's some context. Let's get on to relative strength. If you've downloaded the latest template package, you will have seen that within the Pro Tools category, there is a new template called Relative Strength Ranking and Indexing. So relative strength ranking and indexing. I've put this in my favorites category because that's what we're going to be talking about today. And I'm just going to make no changes to this. And I'm just going to run the template. I will make one change. I'm going to change my list to be the S&P 500. And I'm also going to make another change. Sorry. So I'm going to make two changes. I'm going to choose a relative strength function to run this on. Now, by default, and this is just a random default, it's set to % change as your relative strength function over one day. But I'm going to just select over here the IBD style relative strength. All I have to do is select it over here. All of the relative strength functions I have that you might want to use within the template, I have prepended RS underscore. So they're grouped together in this list and easy to find. So you've got the ones I talked about. You've got RS underscore alpha 21, Connor's RSI, IBD, moving average, % change, slope of linear regression, and Wilder's RSI. You choose from any of those. But I'm going to use IBD in this case. You can see that it's changed the function I'm going to use over here. Everything else I'm going to leave as is, and we'll explain a little bit more about this as we go on. You see there's quite a lot of settings. Anything with a highlight of the orange color is a setting that you can change that will affect the way that the template does the calculations and produces results. And so one of the more interesting things we'll get into is this section down here, which is about generating indexes. That's something I've been sending emails out about. It's one of the interesting parts of this template. But before we even get into that, let's just take a look at the output of the relative strength function. So I'm just going to run this template on the S&P 500. You can see it's going and churning through the data. And it ends up producing a report like this. So this is called the dashboard. If you look at the bottom part of the screen, you see there are various worksheets within this report that have been calculated and produced by the template. We're going to touch on all of these. So it's very different to a lot of the templates that only produce a one report type of worksheet. There's a lot of different calculations and things going on in here. But the dashboard is your overall view of the relative strength function that you've chosen. And you can see at the top, it's telling me that I run this on the S&P 500 list. I'm using the relative strength function rs_IBD. And very simply, it's taking the top 10 ranked symbols from the ranking of that relative strength function and the bottom 10 and just putting them into a simple dashboard. So you can immediately see top and bottom 10. Second thing it's doing, it's figuring out what has moved the most in terms of the ranking. So it may not be the highest ranked at the moment, but compared to yesterday, it moved more than other stocks. So the one that moved the most is Dish Network. The one that moved most to the downside is Cisco. Facebook is in that list too. So a lot of names that you're familiar with there. And then the third grouping over here is the fastest acceleration up or deceleration down, and then the fastest acceleration down or deceleration up. So that's kind of a second derivative of the movement there. So that's kind of a general view. It's only giving you the top 10 stocks. What I'm going to do is go from right to left of this worksheet and kind of just explain how this all gets calculated and what it all means. So first of all, let's take a look at this worksheet over on the right-hand side, rank of values. This is for every stock in the list. It's gone, and then for every day that you are have chosen to run this report for, it's gone ahead and actually calculated the output from the ranking function. And it's put the actual raw value, the ranking value, into each cell for each stock. And you can group these, sort these just in the normal way you do with EdgeRater reports by clicking on the columns so you can find the top and the bottom. Now these values are ranging from, they could be anything, right? Just depending on the output of the function. So they're not bound from 0 to 100. So it makes it difficult to compare against other stocks. You can, in the way that you do with other worksheets, reports in EdgeRater, you can double click and bring up a chart. And let's put this side by side just to show you. Now with all of the worksheets that I'm showing you in this workbook, you can do what I'm doing here. And that is selecting a cell. You can scroll down and I can see my list as I go through. I can go to a different day, say 5/23/2019, and sort in a different way, and then select here. As long as I have this little annotation box turned on, it's going to point me at the day that I've selected in my worksheet. So as I come down through this list now, it's going to say, yes, this is fine. This was the output from the relative strength function for this stock on the day that it's pointing to. All right. Moving on to the left. The next worksheet is the close price. This is the actual price, the close price for each of the days in the report. The next worksheet on is the percent change. So it's the difference between the close price on one day to the close price on the next day. So you can sort by percent change too. Find the biggest percentage changes on a day, and losers. So these worksheets have just been put in, actually, the close price and the percent change, because that data is needed to do other calculations. So it's not there specifically intended that that might be something interesting to look at, but it is something interesting that you can look at. But the main purpose of putting it in here is other calculations in the report use this information. So we get on to the more interesting worksheets now. We start getting into percent rank. So the idea of percent rank is it takes your rank value, and let's just sort the rank value by Friday. And at the top of the ranking, there is TSS, followed by Anadarko, and then AMD. So if we go to percent rank, it should be exactly the same ordering. Okay, that is definitive. It should be the same ordering, but now the number that it gives to in the cell is not the actual output of the ranking function, but it is a percent rank. And a percent rank is just taking all of those values and giving them a value between 0 and 100%. So now we have taken that space of output values, which can range from anything to anything, potentially, depending on your ranking function. And we've now normalized it from 0 to 100%. We've actually ranked these stocks in order. And you can go back through the worksheet and choose any particular day and find out what was ranked highest. It will appear in your chart over here. And you can start scrolling down through the list to see. Another really interesting thing I think here is if you control wheel mouse to zoom right out of the report, you can see it's highlighted so that the darker green is the darkest green value is 100%. The darkest red value is 0%. You can't really see the names of the stocks here, but you can still sort by various columns. So it gives you an idea of how that ranking, so now we've really zoomed right out here, you can't see anything, but you can still see that when something comes into the green level of ranking, you can see that, potentially it stays. I'm not saying that that's, I'm just saying you can see the green, and if I select different cells, you can see them and the way that the shading occurs. Anyway, that's something interesting you can do. Average rank. This is basically if you make no changes to the template before you run it, the average rank is going to be exactly the same as the percent rank. But it gives the opportunity to, if you have a ranking function which changes rapidly, potentially a ranking function that would change rapidly would be 1 day percent change. It's just using 2 bars to calculate that. So it can be very erratic. The average rank column just gives you an opportunity to average those ranks over a certain number of bars. Now, another way of using the worksheet and just avoiding using average rank or worrying about average rank is to make your ranking function deal with averages. So for instance, instead of doing percent change over 2 bars, you could do percent change over 3 bars, 4 bars, 5 bars. You could do percent above a moving average. would work out to equivalent information, but it's just another option in the worksheet. And then we get into some of the other sheets that go into calculating that dashboard. So that will be the rank change in the average rank from the prior day, rank acceleration, acceleration in rank from prior day. And what I find now, this is the majority of the new work has gone into this next section, which is calculating indexes from these rankings. The idea being, let's go back to percent rank. The idea being, if you have found a function that you believe to bring strong stocks to the top of a list, then it would be really interesting to create a portfolio of those strong stocks and rotate into the new stocks that are at the top of that list on a daily basis. And I'll show you what I mean here. Just, it's probably obvious, but let's just go ahead. Say we'll go to 5/20/2019. the strongest stocks according to this ranking function on 5/20/2019 were Qualcomm, AMD, CMG, CDNS. Now, what if you took a portfolio on that day? You started a portfolio and you had the top 5, 10, 15, 20 stocks, and you rotated on so that on this was your grouping of stocks on 5/20, and you purchased them, put them into a portfolio on 5/20. Now on 5/20, that would have, we'll call that a base value of 100. Now on 5/21, obviously the stock's value they'll have changed. The index value then, or the base value will go to something other than 100. If overall the stocks have increased in value, the index is going to go up to greater than 100. If overall they've decreased in value, then it's going to go less than 100. So by choosing a certain base date and setting that value at 100, you can get an idea by creating these various slices to create indexes. You can get an idea of how your ranking function is choosing stock. Is it a good ranking function if you choose stocks that are towards the top of the ranking? Does that produce better results with a portfolio than choosing stocks that are towards the bottom of the ranking? And so the idea behind the indexes in this system is that it will take your ranking from 100 down to 0 and create various slices of it. So you'll get the 0 to 10% is your first slice. So that's down here, MYLAN, MYL, all the way up to GPS or GAP. That'll be your first rank, 0 to 10. The second grouping will be 10 to 20. So that's a grouping of stocks. So if you're always rotating into the group of 10 to 20, or if you're always making sure your portfolio is in the lowest ranked, which slice is going to outperform? That's the whole idea behind these indexes. And there's also this idea, and this is an important distinction, between rotating indexes and static indexes. So a rotating index is, as I just described, that every day you're rotating into a new group of stocks based on the new ranking for that day. Whereas a static index is you take the base date, so in this case 5/20, you take the group take your various slices, 90s to 100s, 0s to 10s, etc., but you keep the grouping constant throughout the index generation period. So at the end of the index generation period, you've got exactly the same grouping of stocks, but it allows you then to see how the index has improved or weakened or how it's changed. So obviously that information is good to see in a spreadsheet, but a better way to view that information. We can see we've created these rotating and static index values. That's one thing. And then we have index charts. So let me just explain the symbols over here so that you know what we're looking at when we're looking at a chart. This is the index worksheet. Rotating index 90% to 100%. And it's got a symbol of IX, stands for index, underscore 90-100 underscore R. That's rotating index 90 to 100%. Then we have IX 90 to 100S. That's your static index. All the way down through to IX underscore comp. That's a comparison index, and that's something where you can choose a specific stock or a specific set of stocks to go to create an index that you can use for comparison. Now, these indexes are all, you can sort these as well. So you can find, since the date we ran this, I'll probably just remind you that by default, the settings in here, we didn't make any changes. It's set to use the base date of 12/24/2018, which was the base low on Christmas Eve. And then through to, if you set the date to be past the end, past today, then it's just going to run through to today. So it's set by default to be at some point in the future. So it will just create the index through to the last available data. And if you remember, we talked about the symbols. And the thresholds, well, these are configurable levels. So it's taking slices from 90 to 100%, 80 to 90, 70 to 80. There's a couple of extra ones thrown in here. There's 45 to 55. The idea with this one is that's right smack in the middle of the range. And then there's a final one, which is 0 to 100%, which basically takes everything in your list and creates an index of that. There's a couple of other columns in here that you can change. Before you run the template, you can just click on these and change them to yes or no. Include them in the chart, yes or no. So by default, the things that are included in the chart, which we're going to look at next, are the rotating index 90 to 100, the rotating index 0 to 10, and then the comparison index is also included in the chart by default. So let's take a look at the chart. Okay, so these are the indexes that are included that we said that we just want to have on the chart to start with. All right, the 90 to 100 rotating index, the 0 to 10 rotating index, and then the comparison index. On the right-hand side, it's actually put the symbol and then a comma, and then you'll actually see the index value. The index value is precisely the percentage change of the average. If you take the average percentage change of all of your stocks in the index, we're starting off with a base of 100. So now the 90 to 100s have a value of 113.82. So that's a 13.82% gain in that index. The comparative index, which by default is set to SPY, the comparative index is 17.98% gain since the base date of 12/24. And then the 0 to 10s have, and this is a rotating index, hang on a second. That, Is it just me, or is there something very strange about that? Let me show you something you can do with the with this over here. So let's remember I said include in chart is a field that you can put in the template info at the very beginning. Well, that just sets your initial stocks that are, or indexes that are going to appear in this chart. But you might want to compare against other stocks or other indexes that are in the worksheet, in which case you can just click on the yes column, include in chart, click on it again, it will turn that off and remove it from the chart. Okay, so what you can do is sort by 531. So it's always going to put the very last date of your index, the date that you're running the index to, as a column in here. So you can sort by that column. And then you can say, give me the best and also show me the worst. Okay, so here we have the best is the 45 to 55 group. All right, that's right smack in the middle. The worst is the rotating into the 90 to 100s with 113%. The comparative index is 117%. Oh, sorry. I say it's 107 on the index, which means it's a 117 on the index, which is a 17.98% gain. That's SPY. Since 12/24, it's gained 17.98%. But rotating into the highest relative strength, using this particular relative strength, which is the IBD relative strength, rotating into those on a daily basis did not do as well. And then let's go to the 0 to 10 rotating again. And let's take off this 45. Okay. So now the 0 to 10 rotating is 120.82%. 0.97. It's come down a lot since we've had this recent sell-off since May 3rd. But this index, rotating into the lowest ranked stocks in the S&P 500, actually managed to get up to 140 on the index, which is a 40% gain. So managed to get all the way up there, but it's come in now. But it's an interesting, and this is something that people had replied to my email and said, surely you got that wrong. You're rotating into the strongest stocks. That should have been the best performing index. Well, this in this case, using this list of stocks and using that relative strength function, that is not the case. You can run this relative strength function on other groups. For instance, maybe the gold group started moving this week, or the oil and gas group has been moving down. You can run that, and you might find different results. But running it on the S&P 500, actually, it would have been better to always rotate into the 0 to 10 group. Now, there's a lot of stocks in the 0 to 10 group. We're dealing with 500 in the S&P 500, and so a 0 to 10% is going to be 10% of that index. It's actually going to be 50 stocks. So potentially what is happening here is that you've got some of those really low-ranked stocks have made big moves. And that's potentially why the 0 to 10s are outperforming. But also it's interesting to see that the 90 to 100 is actually underperforming the SPY in this case. So let's, that was an interesting date, 12/24, running through to 5/31. Another interesting date has been May 3rd. Now let's take a look at, let's just bring up a chart. We'll go SPY. And we'll go over here. So May 3rd was, you could argue that was the peak of the recent peak. It could have been a few days earlier, but May 3rd, there was a close at a high. So you could say May 3rd has been interesting. So in that group of stocks, what has been, how did that ranking function perform from May 3rd through today? So let's go back and run the template from May. So it'll be 5/3/2019. Still going to compare against SPY using exactly the same list. And I'll just run that. It's going to generate a whole new workbook. Came up over here. And then let's look at the index charts on here. So we started again at 100. And now look at the 0 to 10. The 0 to 10s actually performed worse, with about a 14% drop compared to the IX_comp. That's your comparison index, which is SPY, which is at 93.62 in the index, which is about a 6% drop. So we've had 6% drop in SPY. But rotating into the worst performing stocks, according to IBD ranking, will have given you a much worse drop. And rotating into the strongest stocks in this downturn will have given you actually a better performance, but still down. So it's interesting to split apart the time periods and investigate those types of things. Now, IBD ranking, that's just one style of ranking, fairly simple formula based on splitting up the history of a stock over 1 year period and assigning different weightings to percentage change over 1 quarter, half a year, 3/4 of a year, and a full year. So it's obviously a longer term, taking a longer term view. And we're dealing here with very much a shorter term time frame. So one thing that you might want to do is change the ranking function and get an idea for different ranking functions. And so what I want to go to now is, I mentioned before that something else that's been moving, started moving a few months ago, and it's had a sell-off recently. And then on Friday, looked like it's starting to move again, is the gold group. So let's, if you open up your symbol list, you should find now that you have a list of the components of the GDX ETF. Make sure you update that so you get the latest date. And I'm just going to choose a 1 day percent change style ranking on here. So I'm going to click the choose. I'm going to go back to 1 day percent change. And we'll start this index from, well, first of all, it's always good to know when to start an index. What would be an interesting thing to look at. So a good thing to do would be to bring up a chart. So why don't we do that? So here's a chart. Let's take a look at GDX as a whole. And here's how gold has been, or GDX, the gold miners, has been running. So again, I say again, this is a different date entirely. This was September the 11th, 2018, base low. And then on Friday, something is afoot with gold here. So let's take a look. And then there's a base low down here. And this would have been May 2nd. So something you could do, let's take May 2nd, because we're looking at a very short time period with our 1 day percent change. Let's go May 2nd to today. So I'll come over to, I'm using that list, as I said before. I'm going to choose May 2nd, 2019 through to today. This time a comparison index, I'm going to choose GDX. That would make a lot of sense. Could choose GLD, that would also be interesting. And I'm just going to run this. Okay, it's a much smaller list than before, so it ran a lot faster. And then we'll take a look at some of the index charts in here. All right, now bearing in mind, now this relative strength function is based on a 1 day percent change. So what this means is when you're looking at the 90 to 100 group, it means that you are daily rotating into stocks that had the biggest 1 day percent change on the prior day. And in this case, doing that in gold since May 2nd in the GDX group would have yielded a negative. So the index has started at 100, it's now down at 83. So that's obviously a loss there of 17%. GDX itself has gained 7% over that time period, but rotating into the biggest 1 day percent changing stocks has yielded a 16% gain. Now let's go ahead and sort this list top to bottom. And actually the highest one of these indexes is the 0 to 10. So I said that wrong, I believe. Is the 0 to 10. Okay, 0 to 10. Now let's just be clear about what this is. 0 to 10 rotating index. We're using the 1 day percent change. So a high value in your relative strength means that the 1 day percent change has been high. So what we're doing with the 0 to 10 rotating index is we're rotating into the worst performing stocks every day, okay, from the prior day. And what we're doing with the 90s to 100s is we're rotating into the best performing, the top 10% of the 1 day percent changes. Now, rotating into the top 10% of the 1 day percent changes has yielded this negative 16 and a bit percent. Rotating into the bottom of the 1 day percent changes has yielded a positive 16%, whereas the GDX as a whole has yielded 7% since that base date. And obviously there was a big move started well, it started this week, and I say a big move. We don't know if this is the start of a major move or if this is just a temporary reaction to some of the news events this week. So here's essentially it's been in this, it's been coming down from the highs achieved over here. It's been in this base range. And then Thursday, Friday, we had a bit of a move. So anyway, these are ways of analyzing and looking at indexes or groups of stocks ranked by their relative strength function. And you can choose different relative strength functions. And you can see if it would have been better to be in a certain group of stocks versus another group of stocks. So let's take, I want to show one more example of something that you can do here. So we've looked at the S&P 500, and I will come back and look at these questions in a second. We looked at the S&P 500. We've taken a look at GDX, which is a much smaller list. Well, what about, you could do something like take 2 stocks. So let's do that. Let's choose, and I'll bring up my list of CBOE weeklies. I'll unselect and deselect everything. And then I'll come down in here. I'll just choose to take 2 stocks and use them for this ranking and indexing. And I'm going to choose, let's choose Apple. And let's choose Amazon. So I've just selected those 2 here. I'm still going to use my 1-day % change. Date that I'm going to choose is going to be, we'll go back to 12/24, 2018. And we'll compare versus, and this will be an interesting comparison. We can choose to choose Apple, comma, will allow us to create an index of the 2 together. Apple, comma, Amazon. That will create a comparison index. And I'll just run that. Now, there's only 2 stocks in this whole list. If you go back to the % rank sheet, you'll see how that looks. Sometimes Amazon is the top because we're using 1-day % change. Sometimes Amazon is the top, Apple or Amazon. It's one or the other. Okay, so it really only makes sense to look at the indexes, the 0 to 10 and the 90 to 100. So let's go to the index charts and see how that looks. So interestingly, there's a 29% gain, the average of both of those together. But rotating into the biggest % changing one, either Amazon or Apple on a daily basis since 12/24/2019 yielded 35%, as opposed to rotating into the worst 1-day % change yielded 23%. But these types of things are interesting. I think you can create yourself a nice little trading strategy by choosing a couple of stocks to compare against and using a strategy for rotating based on your relative strength function. So something to for everyone to take a look at, run their own comparisons, go back through historical data, and analyze the data. You can look at time periods where the market has been increasing, and also take a look at time periods when there's been a sell-off and see, have the highest relative strength stocks underperform the lowest during sell-offs or during, how does that compare to rallying markets? And the other thing I didn't mention while we were on the % rank sheet or any of these other sheets is if you do bring up the chart over here, the chart has been configured to show you some interesting information. Now, it's not quite so interesting because I'm only looking at 2 stocks here, but we'll take a look at one of the others in a minute. But the lower areas show you the actual rank value, and then it will show you the average rank and also the rank change. So because we're looking at 2 stocks, it's either going to be a 1 or a 0, 100% or 0%. So you can see on these days that it was it had a better 1-day % change than, so we're looking at Amazon here. So Amazon had a better 1-day % change than Apple. If we click on Apple and look at this time period here, you should see that that's exactly the opposite. Oops. Okay, so yeah, it's exactly the opposite in that time period. That should be true. So this is, so just to verify that our information is correct, this was looking at March 5th through to March 12th, 2019. This is Apple, and it had a ranking of 100%, March 5th to March 12th. Go to Amazon, March 5th to March 12th, they had a ranking of 0%. That's what you expect. You just want to go through and verify some of those things occasionally, make sure the information is correct. I've done quite a lot of testing on this template, but still there could be some things that to look out for. And if you ever find anything that's curious, please let me know, and I can investigate. Okay, so I think pretty much that's what I wanted to cover on this template, and I'll take questions. I've got some questions here. Let me have a second. Okay. All right, so I think the first question that came in was, can you can you set the top 20 instead? All right, so let's just go back and review over here. This list of inclusion thresholds, oops, down here, is completely configurable. So you can choose the lower, you could say 0 to 1%, 0 to 2%. I could come in here and change this to, I would like this to be 90 to 91%. All right, completely configurable by you. You can also add areas into this if you like. You'd have to allow editing on this template, but you could say insert a row, and then you could add your own threshold level in here, say 50 to 51%. And that should be included in the chart. So you could do things like that. Yes, it's completely configurable. Is the RS calculation doing daily calculations, or is it showing several days for RS trend? One-day swings could be misleading. Yes, yeah. So that, depending on the function you choose, and you choose the function up here, some of the functions have parameters that you can choose. So for instance, percentage above a moving average, you can choose which period of moving average to use, in which case that's going to smooth out your changes. The other thing that will smooth out changes is percent change. You could choose 10-day percent change. You could choose slope of relative strength, the slope of the linear regression line. Just choose a longer period to smooth out the values. And the other thing that will smooth out values, as I said before, is the average rank sheet. So if you're using a 1-day percent change and that changes rapidly, you could then set your rank averaging period to be, say, 5. And what will happen is the average rank sheet then will be an average of your percent rank sheet. So it will smooth out the information. Is there a formula for, yeah, the formula for the RS underscore IBD rank? Absolutely. All formulas in the program are visible to you. You just go to chart scripts, you would go into your RS underscore, and here's the RS underscore IBD formulas right in there. You just click on that, click on edit, and it will pop up the formula used for that. Very simple formula, very similar to the Alpha 21 formula. And I say this is, don't get me wrong here, this is not exactly what IBD uses. It will give you a similar list if you run it on a quality group of stocks. It will give you a similar list to IBD ranking. It's not something that they publish and they say this is what we use. No, it's best estimates as to what is being used by IBD to create their top 50 ranking. Where was the annotation button? Okay, so we're talking about the charts now. So I'm going to just go back to over here and go to my S&P 500. I just want to run this one more time because I think as we look at some of these questions, this is going to be more appropriate. So let me run this. And see, it doesn't take that long to run. We're talking about 500 stocks here. There's a lot of data gone into this. Okay, so I think that question came up when I was talking about you want to see the date that you clicked on. There's a button here called Show Annotations on your chart, and that will just turn on your little annotating tool. Well, it will turn on the automated annotations, which means that's linked to now to a template. So whenever you're clicking on something inside a template, or a report, I should say, that's produced from a template, it's going to try and show you the context of that, the cell, the information that you clicked on. And that applies to most reports in the program. So if I click down here, it's going to tell me, look, this is the bar, corresponds to 5/20/2019. That's the bar that you clicked on, 5/20/2019. You can go all the way back in time and click on something over here. It's going to update the annotation for you. And then as you scroll back and forth through the sheet, I'm going left to right here. It's just going to show me the different days. And I can go up and down, show different stocks for the same day. How do you measure acceleration? That's a good change. That is a good question. So rank change is obvious, right? That's just a change in rank from one day to another day. Acceleration is the change in change. Right, it's the change in change. Yes, thank you, Ralph, for that. And I did notice that, and I said that prior. And I'm really not sure. I have to investigate that a little bit more. But there was a little bit of a hiccup in the middle of that presentation with the values. And I haven't actually seen that before, so I'm curious as to what that is. Okay, Michael, would this be better applied to sectors and industries for rotation strategies? I mean, potentially yes, and that is, as I got into the oil and the gold groups. These are ETF groups, and you can definitely apply that to ETF groups. I think it's very useful. And yes, Charles, you could go back however many years you want. Obviously, if you're going to go back further, you will have to change some of the information in the template. Right now, when you run this template, it's going to be looking at however much data you have in your list. And most of the time, you'll only have 10 years of data. You can change that and get more data. But also, you have to change the number of look-back bars to load, because the template, because there's a lot of calculations going on here in order to improve the runtime. It requires you to set the number of bars that it's going to load from the list. So 504, that is approximately 2 years look back. But if you have if you'll try to look back through history over 10 years, then you're going to have to change that look back period to be longer. And you could set it to 10,000, 100,000. You'll just find that your run times will be a lot longer. How are the top 4 Alpha 21 ranked S&P 500 performed against the SPY? Now, that's definitely something you can test with this. Absolutely, I highly recommend going and taking a look at that. The question is from Jeffrey. It's how would the top 4 Alpha 21 ranked S&P 500 have performed against the SPY? So you have the program, so I would recommend going and trying that. I'll give you a little, let's do a little example of what you would need to do. You've got the S&P 500 list. And we're going to use the same date. Okay, 12/24. We're going to use alpha 21 ranking. And there's a little description here. Alpha 21 relative strength function gives the relative strength value based on percent change over four time periods, 5, 10, 15, and 21 bars, with different weightings applied to the different time periods. Okay, and you're saying, and I think you've raised an interesting point here, because you're saying, how would the top 4 ranked S&P 500? Well, the S&P 500 has got 500 stocks. So if I'm looking at 10%, I'm going to be looking at 50. So if I want to look at 4 only, how many percent's that? That would be your that would be your question. 1% would be 5, obviously. So we're close to 1%. Let's take top 5 then, and just make it simple. So we'll go 99% to 100%, and then on our lower end, we'll look at 0% to 1%. How about that? So we've got top and bottom alpha 21, and we'll compare that to against the SPY. So we're going to use SPY here. Okay, any guesses? I mean, you may have a preconceived idea of what your result's going to look like. Let's take a look. All right, index charts. So here we are. Here's our 0 to 1, and here's our 99 to 100. So, so this is showing that SPY gained 17, almost 18% over that time period. The top 4 alpha 20 run ranked stocks in the S&P 500 gained 12, almost 13%. And the bottom 4 ranked alpha 21 gained 30%. And it's very interesting to run this template when you're using such a large group of stocks, that I think that the zero levels, you're looking at the really beaten down stocks. And so if you're always rotating into the worst looking stocks, sometimes you get amazing moves on those stocks. And so you can end up being quite volatile, but you can also end up performing better. An interesting thing to do here is just rank these by, and by the way, I didn't change any of the other settings, so I only changed the top and bottom. But yeah, so if I sort them by best performance, the 0 to 10, the 0 to 1 rotating group was best, followed by the 0 to 1 static group. And then we're looking at the 45s to 55s. That's the middle of the range. The comparison is down here somewhere in the middle. And remember, I can just click on the yeses here to put all of these into the chart, so you can see them all together. Once you have more on the chart, it gets a bit too cluttered, and it's actually hard to see the line that you're looking at. So you might want to remove some. You can always see the actual value just by looking at the column C over here and see what the actual index value is. Okay. Another question, what about weekly instead of daily percent change performance? Okay, so to do a weekly percent change performance, there are two things that you might potentially be talking about. You might be talking about a 5-day percent change, which if you did that on a Friday, that's going to give you a 1-week performance. But if you do it on a Monday, it's going to give you Monday through Monday. So so then you can, that's a built-in function. You can write your own function, which gives you a weekly percent change. So you can do that. Another one, yes, you can do 1 month percent change. Again, same idea. And if you want to rotate it into 5 stocks on a monthly basis, exactly the same idea. But if you're talking about a specific number of stocks, remember this template is taking slices of your relative strength ranking function in deciles. It's taking, you have to figure out how many stocks, what the percentage is that you're going to have to use in order to get your specific number of stocks. So simple enough calculation, but just bear that in mind too. And Jeffrey, you have a lot of questions about this, and that's great. I like that. And I highly recommend just using this template. Everything you asked is doable in the program. What if you choose? So if you chose a stock with or ETFs that had weekly bongos, run a scan for weekly bongos. Use that as your input list, and then see if you've improved the results. Okay. Okay. Can you test this concept and see what results would have been had one scaled into each position to a full position, had specific security continued to decline each day, and test this scaling process versus not scaling in as per your example? In other words, would a generic scaling in process, like I noted, have improved any of these results? Okay, this template will not do that. You're talking about a very specific, more of a trading methodology, rather than what I think this is giving you is a general idea of taking slices of an index to kind of just evaluate a ranking function. What ranking functions are working well on this group right now? That's the idea here. Your specific question is about creating a specific trading strategy and trading based on signals and scaling in. And that's something you can do in EdgeRater, but not with this template. Yes, thank you, Abraham. Produced a fantastic product. Thank you. Difficult part is how to use it in a consistently profitable way. 100% agree. I think you have to find you have to investigate historically over time periods. You have to have an idea. You have to be able to evaluate that idea and create an edge for yourself. The program definitely helps you do that. But there's no guarantees. There's not a system in here that's saying if you start with $100,000 and run this particular template, you're going to end up generating yourself an extra $20,000 by the end of the year. That's not there. You have to do some work to figure out a good trading strategy, unfortunately. But I see what same person. Okay, Brad. Results on a short-term basis are counterintuitive. Yes, okay, I agree. But would it be interesting to see the same comparison over a longer time period? Do the worst still do the best? That's a very interesting question, one I'm particularly interested in. And all I can say is what I've tested, and this template has just been released, so I haven't I've done as much as I possibly can in my testing and producing of the template. And so I don't have results for lots of different time periods, but that's the whole point of the template. It allows each person to run over their own time periods and do their own testing. So very much encourage people to do that. And if you find anything that is particularly interesting, please let me know, and we can do another webinar and talk about some of those findings. Yeah, and your point about to look at weekly relative strength, would you just change the rank averaging period to 5? Not exactly, but to do a weekly relative strength, you would probably use what I suggested before and change the ranking function itself. You can change the rank averaging period, but it's just going to smooth out the rotation. So if you find that the template is rotating into different stocks rapidly, the ranking smoothing function will help you with that. How would you compare the performance of your new template with the Morales and Catcher red-blue templates? Okay. Okay, so this template this is in the Pro Tools category, and it's really, as I say, it's just a way for you to do your own measurements of ranking functions. Whereas something like the Morales Catcher Red Blue template and other templates like that are more scanning templates that are looking for very specific criteria, and then showing you that in a report, in a sortable report. But they're not really doing, back testing. This isn't really back testing. It's really creating an index of a ranking function. In a way, it's back testing, but you have to be very careful about what you're doing. There's no, I think as one of the other questions was all about creating a trading strategy. This isn't doing that, but it's giving you some useful, insightful information. Often, I don't know if anybody else has ever wondered this, but often I'm left wondering whether it's very easy for me to see certain things in the stock market, right? I can always see what's been trending up the fastest. What's had the steepest linear regression slope. But then my question is always, well, what if I was just buying something that had the steepest linear regression slope? Would that have outperformed something that had the steepest downtrending linear regression slope? Well, this is a very quick way to show you that answer over any list. It could be a list of an overall market, the S&P 500, could be the list of all USA stocks, it could be a comparison against 2 stocks, or it could be just an ETF group or a sector. So I think it's very exciting to be able to see that information and answer questions like that. Thanks, Brad. I agree. This is a great template. There's a lot of work gone into this template, and I think you can find something very useful to help you with your trading with this. Okay, this is a question off topic, but let me just go ahead and answer. It's a very quick answer. Berkshire Hathaway, BRK. Let's type it into my all USA list. I believe it is in the system. So here you go. BRK underscore B is Berkshire Hathaway B, and then BRK underscore A is Berkshire Hathaway A. Okay, Brad, can I show an example of weekly or monthly relative strength? All I would say is to show something quickly here is, let's go back to select our S&P 500. Okay, here's one example, relative strength over a 1 week period. That can be something as simple as RS, slope of relative strength over 5 bars. Slope of the linear regression line over 5 bars. That's what that is. And let's run that on the S&P 500. So now we've got something that's not based on a 1 day percent change. It's based on 5 days. But bear in mind, it's not going week to week and looking at weekly performance. You could do that. You would have to write your own relative strength function, but this gives you a 5 day look back. And okay, this is our index charts for that. So here it's a different looking result. If you're taking the linear regression lines that have the steepest slope, rotating into those since 12/24/2018 would have outperformed the S&P 500, and it is the 99s to 100s. Okay, and the worst performing down here is the 0 to 1. I can remember I changed that setting, so I should probably go and change that back because we're looking at different data. So just to reset it, I'll just select another template and come back to it. and our settings are all reset. And I'll go and choose the linear regression over 5 days again. Linear regression 5 days. You can choose different time periods and experiment with that. And let's run that again. And here it is. Okay, so this is using a relative strength function 5 days. And we're looking at the slices, 10% slices. So the 90s to 100s did actually perform worse. But notice when I ran the other setting, and I was looking at the 0s to 1s and the 99s to 100s, there were different results. So you can go and play with those. We're taking a much broader range of stocks when we're looking at 10%, because we're looking at 50 stocks in the S&P 500, as opposed to looking at top or bottom 5. But interestingly, the S&P 500 outperformed both the top and the bottom of those over this time period. But the 0s to 10s were doing very well, 35% back before the market took this most recent 6% dip. Okay. Let's have a look. Can you pull in fundamental data into EdgeRater, i.e. PE ratios as one example? Test this idea, you're using relative strength over some rotating period. Okay, so EdgeRater does not have any fundamental data. So what you would do, and I will just mention that there is a program that works very nicely in conjunction with EdgeRater, and it's High Growth Stock Investor, or HGSI, and that has a whole database of fundamental information as well. And you can create yourself a list of fundamental data and run that within EdgeRater. You can easily export that list. The only problem with that is that that list is not changing, rotating on a daily basis with fundamental data. So that would be the problem. But you could take something that had strong fundamental data on a base date and then use that as your base grouping of stocks, which would then rotate into different elements of that list using some of these relative strength functions. George, all right. Backtesting results are based on different kinds of marketing conditions, and that may or may not repeat again. Just finding an edge is more difficult, but it can be done. Yes, totally agree. Backtesting, you're always looking at historical data. It's not talking about what's coming up in the market tomorrow, obviously. Things do repeat in certain cases, but I think trying to get a general sense of things, which is something this template is doing, is very useful. For instance, if you believe we're at now the 200 period moving average and we're going to come back to make new highs, how has the market performed previously when there's been a sell-off or correction and it's gone on to make new highs? What's happened? You know, have the strongest stocks done better, or the weakest stocks done better in that time period? Or if we're at the 200 period moving average now and we're about to make a steep dip and get the volatility really high before we have a turnaround, you know, what's happened in those crashes is what's performed best and what's performed worse. And I think you can get a general idea using something like this technique and prepare accordingly. Yes, thanks, Brad. I agree. Okay, all right. Now let's go over to some other questions. Sorry, we're going on a little bit here, but there have been a lot of questions, which is always good. Thank you for that. Okay, so it's a repeat of the question I answered already about scaling in. Can this be set up to run as a back test? It is. This is entirely separate from the other areas of the program which deal with backtesting. But essentially, when you run this template, you are going back through historical data and comparing, just as a backtest would do. So it's kind of, as I said before, I'm careful about using the word backtest here, but it's, anytime you generate an index from anything, you're having to look at historical data. So all of the market indexes are all generated using historical data. That's exactly what this is doing. So it's not, be careful about using the word backtest. It has negative connotations sometimes. Okay, that was a repeat of that question. Thank you. Okay. Does the composite index symbol have to be in the symbol list? That's a great question, and I didn't mention that. The symbol that you choose to use to run your comparison against, you could choose one symbol, in this case SPY. You could choose two symbols. You could say SPY, comma, IWM, or 3. Just separate them by commas. Now, if you are subscribed to EdgeRater Templates and Data, then if the symbol is not in your current symbol list, then it's going to go to the master EdgeRater database to get the symbol. So it doesn't have to be in your symbol list. If you are not subscribed to EdgeRater data, then it has to be in your symbol list. That's the only place it's going to know to get the data. Good question. Thank you. Okay, great. Peter, can this be charted to a tree graph? I like the sound of that question, but I'm really not sure. I'm really not sure. We might need to talk offline about that. Sorry, I don't have a good answer for that. Okay, I hope that I think we've gone through all the questions, and give me some feedback. Do you think this is something that you will find useful? If there's anything you'd like to see different with the template, let me know. But yeah, just send either type in the comments here. A yes if it's good. No if you don't think you're going to be using it. And if you have further comments and more in-depth kind of discussions, just send me an email, chrisw@edgerater.com. Wojtek, yes, with this template, you can generate your own index. Absolutely. You would, for instance, just by typing in your comparison index components like SPY, IWM into your comparative index, you end up generating an index of SPY and IWM. Michael Bryden, yes, yes, prefer sectors and industries. Okay, and I think that is a very good comment. Sectors and industries, and I would say if you do have, and I mentioned before the high growth stock investor program, if you have the high growth stock investor program, there's a very good hookup between HGSI and EdgeRater, in which you can actually get sectors and indexes. I have them in here. So I could say, look, I'm going to use my list of, this is my list of industry groups that I've got. And now I can run this relative strength over my list of industry groups to see which industry groups are, how they're comparing against each other. I have not ever tried this. So let's what the heck? Let's choose a relative strength function. Let's just keep this one. It's the slope of the linear regression line. And see what happens here. Could be interesting. All right, so what have we got? Current top 10 ranked industry groups are listed here. Let's look at the charts. All right, it used to be that I say used to be, up until this recent sell-off, the 0 to 10s were outperforming based on this ranking function. We're outperforming. One interesting thing I sent an email out about in the week was using this with Wilder's RSI. Wilder's RSI has been designed to indicate overbought, oversold conditions. And it's an oscillator really that ranges from 0 to 100. And so it's actually really interesting to use this in conjunction with Wilder's RSI, because from Wilder, he said that stocks that have over a 70 on that relative strength index are in overbought conditions, and if they're under 30, they're in oversold conditions. Well, that corresponds to, let's say, you can choose all of the stocks that are in the top 10% of values for Wilder's RSI and compare them against the bottom 10%. Let's do that quickly. That would be something interesting to show. I know we've run over time here, but let me just, it's always, these things are very interesting. And let's choose Wilder's RSI in here. Default parameters are 14 days for that. And let's choose the S&P 500 again. Let's go back there. Okay, so index charts over here. So with Wilder's RSI, okay, we have so this performs, whereas the others may have been unexpected, this is now as expected, right? Because the top in terms of Wilder's RSI have underperformed, but not by much, and actually, pretty close to the comparison value. And if we sort this by top to bottom, the actual best performance here was a static list of the 80 to 90s, which made a 23% gain, or a rotating list of the 10s to 20s. Thanks, Joel. Yep. Wojtek, let's say you pick a number of stocks to generate the index and then run the ranking on the rest of the stocks. Yes. So I think, am I understanding you correctly in that the number of stocks to generate the index would be here, that you might say, I'm going to use, SPY, IWM, Google, Apple, and then run it on the rest of the stocks. And the rest of the stocks would be whatever's in your list over here. Yes, Michael. With using Wilder's RSI, buying the oversold beats buying the overbought then. Right. And try that on different indexes. I think you'll be surprised. I think I sent my email yesterday, was about Wilder's RSI. There's an interesting result there. I forget what the list of stocks I was running that on was. Could have been the oil group. Okay, great. Tweaked for pairs trading would be more useful. Okay, great, but otherwise powerful template. Yes, it is powerful template. Yes, and pairs trading is a whole other ball game, but it does have some relation to this. So anyway, it's ideas for more templates going forward, and thank you for attending this webinar. We have run over time. Thank you for sticking with me, and I hope you enjoyed it. The recording will be coming out later on today. You will get an email from me and probably an email from Zoom tomorrow morning at 9 a.m. They send the email out automatically a day after the webinar's finished, but I try and get the recording up online before that. And I will send an email to all registrants on that when it's available. Yeah, okay, thanks all, and have a good weekend. See you soon. Bye for now.